Hello everyone, I hope you're having a great day so far. What we're going to do today is we're going to have a lesson on Social Security and Medicare. But before we do that, we're just going to do a little warm-up problem from what we talked about in our last lesson. Remember, we talked about benefits that you get when you have a full-time job. Remember, certain benefits are, by law, mandatory for your employer to give you, and other ones are optional. So let's just do a quick example here, just dealing with some benefits. So it says Gabe contributes 15% of the total cost of his individual health care coverage. He pays $28.80 per week towards this contribution. That means then that his employer would be paying the rest of his health care coverage. This question asks, so what is the total value of Gabe's health care coverage for the year? So before we figure out what his total coverage is or how much it costs, we want to figure out, well, how much does Gabe actually pay per year? We know how much he pays per week, so we're going to say Gabe pays per year. We got to do a little converting. Well, we know he pays $28.80 per week. So to convert to years, we're going to have to go ahead and multiply by 52, since there are 52 weeks in the year. And when we do that, so let me grab my calculator here. You should be doing the same. We are going to go ahead and get 1,497.60. So that's how much Gabe pays per year towards health care coverage. We want to figure out how much his total health care coverage costs. Well, we can say that is X. We're going to say X equals the value of health care coverage. So we know that to find Gabe's amount, how much he pays 15% of the value, or of the total of the health care coverage. Of in math, we know means multiplication. So we're going to say, well, 15%, so 0.15 of, which is times the total cost, which is just the value of the health care, which is our variable X, is equal to what Gabe pays. So that $1,497.60. We're then going to go ahead and divide by 0.15. And looks like 4x, if we plug this into our calculator, we are going to get 9,984. So that's how much his total health care coverage costs for the year. We know that Gabe pays this $1,497.60 worth. It doesn't ask it, but sometimes they will in problems like this. So I might say, well, how much does Gabe's employer pay? Well, to figure out how much his employer would pay, you just have to take how much it's totally worth minus what Gabe actually pays, and the remaining would have to be paid by the employer. And this problem doesn't ask that, but just know that in future problems it might ask that. So let's go ahead and jump into our new lesson for today. Again, we're going to talk about Social Security and Medicare today. We're going to go ahead and compute paycheck deductions for Social Security, and we're going to compute paycheck deductions for Medicare. So first off, if you see this card, this should be something familiar to you. What is this? Well, this is a Social Security card. It says, well, why is this important? So this is a 9-digit number issued to every U.S. citizen and eligible U.S. resident. So maybe we'll write that down. 9-digit number issued to every U.S. citizen and eligible U.S. resident. Why do we have these Social Security cards? Well, the main reason we have a Social Security card is because it keeps track of lifetime earnings, meaning how much you make at your jobs throughout your life, and it also keeps track of your number of years worked. Number of years worked. So why it keeps track of these things? So based on how much you make over your lifetime and the number of years that you worked, when you retire, okay, and we'll talk about some of those ages that are considered retirement, you start getting money from Social Security. So this Social Security is money, or it's income for people after they retire. It pays for benefits to disabled workers, and if you die, the benefits are going to be passed on to surviving members in your family. So again, what the Social Security card does is it tracks your earnings over your lifetime, so that when you retire, you are going to be getting some money back, because you're paying into Social Security right now. Out of every paycheck, some of it goes to Social Security, and eventually you'll get some of that money back when you retire. So again, Social Security is an insurance from the government that provides income to retired employees, and it covers disability. Sorry, I forgot an S in there. Disability. Medicare, on the other hand, is a health insurance from the government that covers people over the age of 65 and some disabled people under 65. So again, once you retire, so around that age of 65, the government is going to provide that health insurance for you. And this is something that comes out of our paychecks now as we're working, so that we can enjoy that benefit when we retire. What we're paying for right now, so when we contribute money out of our paychecks to Social Security and to Medicare, actually is paying for people that are retired right now. That's where that money goes. So then when we retire, whoever's working, when they pay into Social Security, they're using that money, the government is, for us when we need it. So a little bit more about Social Security. So Social Security was started by President FDR Franklin Roosevelt in 1935. And what he instituted was something called the Federal Insurance Contribution Act, or we just call it FICA here, Federal Insurance Contribution Act. And what this is this is just a U.S. law that creates a payroll tax. So meaning there's a tax on your paycheck every month, or how often you get paid, requiring a deduction from the paychecks of employees, as well as a contribution from the employers. So it comes out of your paycheck, and your employers have to contribute to your Social Security and Medicare, so that we can fund Social Security and Medicare programs. Again, we've talked about this, but it covers people that are retired. It covers people that are disabled and no longer able to work. And it also covers surviving family members of an eligible worker that dies. You have to pay Social Security tax. It's not an optional thing. This is something that comes out of your paycheck. Again, those contributions over your lifetime are tracked using that Social Security number, that 9-digit number. A little bit about Medicare here really quick. Again, that falls under that FICA, that Federal Insurance Contributions Act. It covers people that are retired over the age of 65. It covers also disabled and under 65 in some cases. Again, it goes case by case, and that's something that the government would determine. Just like Social Security tax, you must pay Medicare tax. This is the largest health insurance provider for people over 65 years old. So with Social Security and Medicare tax, this cost is split evenly between the employer and the employee. So whatever I contribute or whatever comes out of my paycheck, the same amount is being contributed by my employer, who I work for. If you are self-employed, obviously you don't have anyone to split it with, you're splitting it with yourself. So you'd be paying 100% of those fees. The amount you pay is based on the Social Security percentage, and this is set at a federal level. Okay, right now our Social Security percentage that we pay is 6.2% of our income. And your maximum taxable income set at a state level. So for instance, I'm just making this up right now, maybe in Montana they say, well, the maximum taxable income is $104,000. So they can only take up to 6.2% of that $104,000. Anything over that, you wouldn't have to deduct that Social Security tax from. Medicare, on the other hand, and we'll talk about this once we get into examples, that is based on your total income. There is no cap for that. So if you make $1 million, you have to pay a percentage of that, and there's no limit, like there is with Social Security. So again, I have mentioned this before, but the money you and your employer contribute to Social Security and Medicare is used to pay for the current benefits to somebody. So we're paying for somebody right now that is retired. And again, when we retire, then whoever's working, they'd be paying for those benefits for us. So hopefully that made some sense to you. We're going to go ahead and get started with a couple of examples. The first one says, Ramiro got his first job in 2006. And that year's Social Security tax was 6.2% of his income up to $94,200. So they can only take it 6.2% up to $94,200. Medicare tax, on the other hand, was 1.45%. And remember, there's no cap on that, so you pay that for your entire income. It says if Ramiro earns $73,210 in 2006, how much did he pay for Social Security and Medicare taxes? Well, if we start with Social Security, we first have to think. So we know that the cap for Social Security is at $94,200. That's the max taxable income. Well, Ramiro is under that amount, so we don't have to worry about going over that max. So he has to pay 6.2% of his income. So we're going to take that $73,210 and we're going to multiply by 0.062, 6.2%. Which that tells me throughout the year that Ramiro is going to be paying $4,539.02 towards Social Security taxes. Next, for Medicare taxes, for Medicare it says the tax is 1.45%. So again, we take his income, the $73,210, and we're going to multiply by 1.45%. So that tells me for Medicare throughout the year, Ramiro, if I plug that into my calculator, is going to be paying $1,061.55. Social Security and Medicare. Paying $4,000, almost $5,000 for Social Security, about $1,000 for Medicare.